Hello everyone and welcome to Trade with Benny D. On this channel, I teach forex trading the simple and practical way, focusing on market structure, liquidity, price action, and risk management so you can become consistently profitable. If you're ready to improve your trading, hit the subscribe button and let's dive into today's lesson. Okay, so as you can see on your screen, this is Volatility 25 and I took this trade yesterday and it is dropping. Alright, but let me give you the breakdown of what I did and so you can implement it in your home trading. Alright, so this was the trade yesterday, this was where it was yesterday, and currently this is where the trade is right now. You can see the market has dropped down this place. So I'm going to show you how I entered this trade. So first and foremost is the direction of the trade. What is the bias of this market? What's the market doing? As you can see, market is in a bearish momentum. Market is selling. Market is bearish. So what do we do? This is how I analyze the market. Firstly, I mark my swing high. These are my swing high and then my swing low. And all in between is the trading range. This is the trading range, right? Okay, now let's go into the analysis. This was the previous break of structure market gave. So the previous break of structure, right? So after this break of structure, market came back up, then pushed down, leaving this inducement here. This is this trap for traders, leaving this inducement here. Right, so sorry. So after this inducement, we I had after in the your point of interest is the one above the inducements. So we have this zone here. That is one. We have another here, and then we have the other block here. Now I know you can see this one held, but just go with me. Now, if you, I know you've come across a lot of videos where people say the first point of interest after your inducement is your point of interest that is going to hold. And now I'm going to show you how to mark out, how to know which point of interest is holding and which is not holding, right? Because some people can tell you based on only the order block, and the price can go up and don't get to the other block before reversing. Sometimes it will hit the first zone or the second zone, and if you are setting limit, you will get stopped out before market eventually moves in your direction. Now let me show you how we do this. So when market gets to this first point of interest, because we already know that the overall direction is bearish, so we go to the 1 hour time frame. Now once we're in the 1 hour time frame, you can see that price is bullish. The market structure, remember, always focus on what market is doing, not what it should do. What market is doing here, the market is buying, market is bullish. It's getting higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So that's how you know the market is bullish. You don't, and in this scenario where the H4 is bearish, you don't blindly sell because you're expecting it to change the trend. If you are expecting market to do anything, you are gambling. That is what it is. You are gambling because you don't predict the market. You don't predict market. You react to what market does. So markets is bullish. It's creating higher highs, higher lows, higher highs. Now once market got to this um, first point of interest, we don't sell. So what do? Seeing that this um, trend, this 1 hour trend is bullish, you wait for the alignment. You wait for 1 hour to align with the 4 hours, because 4 hours is bearish. You wait for 1 hour to align with the 4 hours before you take the sell. And now, as you can see, market is bullish, and as it's going up and down, it's see this place. This is the previous low. It did not close below this low, and then it's pushed back up, which means that this zone did not hold. So that's how you saved yourself from this. And now market has gotten to the second zone. Where's your previous low? This is your protected low here. Right here is the protected low. Some people can use here as the external liquidity, yes, but this is an internal, so we use this place. So markets did not close below this place, saying that market is bearish, which means this H1 is still bullish. Now H4 broke above, which means this zone did not hold. Now to the other block. This is where the magic happens. Once markets got to this place, this is now, it created this low here. And what the market do in the H1? The H1 now broke, which means it has now aligned with the 4 hours. Right? This is what I'm talking about. This is the alignment I'm talking about. Now H1 has now changed structure to the bearish side. Now since it's now in the bearish side, we're looking for an entry. People take their entry here in the H1, which is fine, but what I did on this particular trade, I went to the 5 minutes time frame. So after going to the 5 minutes time frame, I saw this. Let me show you what I did in this time frame. So what I did was, this was the swing high and swing low, and all these are liquidities here. So the same thing we did with the H1 and the H4, we're going to do this with the H1, M5 and H1. So as you can see, the 5 minutes time frame is bullish, right? They'll be coming higher, low, higher highs, higher low, higher highs, higher low, higher high, right? So like I said, we don't blindly sell once we go to this time frame. We wait for the alignment. Now H5, sorry, broke this structure, changed structure here from the bullish side to the bearish side. Now we are not going any further than 5 minutes, unless some people who go to 1 minute time frame. Now once market has done this, we're waiting for the pullback. Now market pullback, this is the zone I'm looking at. This is the zone I'm looking. Why did I not take this this one here, this first other block? Because it has already been mitigated by these zones here. Now this is the one that is unmitigated. So market came here. I'm not expecting market to push back up above here because the overall trend is bearish. Both the 4 hours and the 1 hours, they are bearish. So once market got here, I was looking for a candlestick pattern to enter. Market was giving some ranging. Market ranged a bit, and then once I saw this pull, this bearish engulfing candle, I knew that the sellers have entered into the market. They've taken over. So now I put my entered at the close of this market. The stop loss was above the previous high, right? That's what I did, and then my take profit was the H4 swing low, because that is the trend we are going with. That is the whole movement. Because we trade with the higher time frame, we enter in the lower time frame. So this is where we are aiming. This is the zone we are aiming. Let me expand this a bit. Okay, so this is the zone we are aiming. This is a 1 to 28 weeks reward ratio. I seen how it is because of the tight stop loss. This is a 1 to 29 or 30 weeks reward ratio. Right now market has given us about 1 to 12 weeks reward ratio. So we are taking it to 1 to 30 weeks reward ratio. That's how I got into this trade. And down the line, market can give me another entry, and then I will enter again and take it down to this zone. So that's how I got this volatility 25. So if you like this video, click the like button and subscribe and turn the notification to get notified for when another video like this drops. and you can tell me in the comment section what kind of video you want to see.